Welcome back to Investing Talk Podcast. Today, we're going to be looking at Windtree Therapeutics. This biotech company's been all over the news lately, and their stock's been moving quite a bit. They just finished a 1-for-50 reverse stock split. So basically, they took 50 shares and squished them into one share to try to get the price up. And companies often do this when their stock price gets really low. To avoid getting kicked off of a stock exchange. Windtree is trying to stay on the Nasdaq with this move. So is this like a sign that the company is sinking? Or is Windtree being clever here? Are they setting themselves up for a comeback? That's what we're going to try to figure out today.
Yeah, Wintree's definitely been walking a tightrope. Their market cap is only $1.24 million, and they have a pretty a scary-looking financial health score of 1.73 out of 10. But there's more to the story than just the stock split. Windtree has this drug called Istaroxime, and it's in phase 2B trials for early-stage cardiogenic shock. So this drug, along with their new corporate strategy, it could mean that they're going to turn things around. It's kind of like a mystery novel, right? We've got some clues, but we don't know how the story ends yet.
Okay, let's investigate. So WINT, that's their ticker symbol, dropped 20.01% on February 18th and closed at $0.11. But here's where it gets a little strange. The volume, the trading volume, actually went down along with the price. So could that actually be a good sign? I'm getting some mixed signals here. What do you think?
Yeah, well, usually when the price drops, it means that people are selling off their stock. So it is kind of strange to see that the volume dropped too. It could be something like what they call a dead cat bounce. And that means that sometimes you'll see like a small jump in price after it even fall, but it doesn't necessarily mean that things are really turning around. If we want to get a better idea of where WINT is headed, we need to look at more than just these daily changes in the stock price. We got to look at their long-term potential, and the overall health of the company. That's really going to tell the story.
Okay, so it's not just about how the stock is doing on a given day. We got to look at the bigger picture. What do those long-term indicators tell us?
Right. So if we look at the moving averages, both the short term and the long term, they're both sending sell signals. And that's not too encouraging because it means that the trend is still pointing down. Then if we look at the MACD, it's given us mixed signals. The 3-month average is showing a buy signal, but the data from February 11th is showing a sell signal. And then finally, the RSI is currently sitting at 2630 NARD, which puts it deep into what we call oversold territory. Now, that could be a buy signal because it's suggesting that the stock might be undervalued right now.
So it kind of feels like we're putting together a puzzle, but some of the pieces don't really fit yet. So for investors who are looking at all of this data, what's the takeaway? What should they be thinking about with all of these mixed signals?
Well, I think overall, the technical picture for WINT, it's still looking pretty bearish, especially when we see those negative moving averages. And we also have to remember that this is a very volatile stock, which means that it's inherently risky, but the technical data is only one part of the story. And we also need to think about all of the big moves that Windtree's been making lately, like their new corporate strategy where they've been buying up smaller companies that have FDA-approved products, and this could bring in some quick cash for them. But at the same time, they're also continuing to do their own research in areas like cardiovascular and cancer treatment. It's a very interesting two-pronged approach. So the question is, could this be the secret to their long-term success?
So they're not putting all their eggs in one basket. They're trying to diversify a bit, which, could be a smart move, especially in the world of biotech, which is always changing. It seems like they're trying to make some short-term gains through these acquisitions, but then also keep an eye on that long-term potential with their own research. And they're really focusing on a specific niche, cardiac treatments. And this could be risky, or this could be their secret weapon. What do you think?
Yeah, it's definitely a strategy that's worth watching.
And then there's also some good news. Their Q1 2024 earnings report show that they had a net income of $10.22 million, which is a huge jump from the losses that they had last year. And this was mostly driven by the progress that they're making with Istaroxime in those clinical trials. So could this be a sign that things are finally starting to turn around for Windtree? What do you think?
It's definitely a positive sign. That earnings report gives us some hope. But we also have to remember that overall, Windtree is still operating at a loss. Their EBITDA is still negative, which means that they're spending more money than they're making. So they still have a long way to go before we can say that they're in the clear financially. So what does all of this mean for you, the listener? If you're thinking about investing in this company, well, it really depends on how much risk you're willing to take and what your investment goals are. So let's look at a few different scenarios. One option would be to invest now and basically bet on the success of these future Istaroxime trials. Now, that is very high risk, but the potential reward is huge. I mean, if this drug is a hit, it could be enormous. Another option is to kind of wait and see what happens with this reverse stock split. Will it bring in new investors? Will it stabilize the share price? This is a more moderate approach with moderate potential returns. And then finally, you could play the long game and hold on to WINT for years and just hope that they become a leader in cardiac treatments. Now, this is obviously a long-term bet. It could have huge payoffs, but it also carries a lot of risk.
So there you have it. Windtree Therapeutics is a company at a crossroads. They have some exciting potential, but they're also facing some serious challenges. So we've gone over the facts, we've analyzed the trends, and we've explored the possibilities. But now it's up to you to decide, is Windtree the right investment for your portfolio? We'll be back soon with more in-depth analysis. And in the meantime, don't forget to subscribe to Investing Talk Podcast, share this episode with your friends, and leave us a comment. Let us know what you think about Windtree's future.
You're right about that. Windtree's strategy, it's definitely not your typical approach. I think what's really interesting about these acquisitions is they're not just buying any company that has FDA-approved products. They're really focusing on treatments that fit into their existing expertise, so cardiovascular and respiratory therapies. So this tells me that they're not just trying to get some quick cash. They're actually building this portfolio that really plays to their strengths. And I think when you take a step back and look at the big picture, it seems like Windtree's trying to position themselves as the leader in these very specific areas. Now, will it work? That's the big question. Because anytime you do an acquisition, there's risk, right? There could be problems with integration or unexpected costs. The market could suddenly change. But, if they can manage to integrate these companies and their products smoothly, it could really help them grow quickly and give them a real advantage in the market.
It's really interesting that they're taking this approach where they want to be the leader in a niche area, especially these days when it seems like bigger is always better. But maybe they're right. Maybe there's something to be said for focusing on a specialty. Could that actually give them an advantage over these big companies that are trying to do everything?
Yeah, absolutely. I think it's all about finding your lane and then dominating that lane, not trying to be everything to everybody. Like, imagine you're a doctor and you're looking for the best treatment for a heart condition, something really specific. You're probably going to trust the company that's known for their expertise in that area, right? And I think for Windtree, this specialization, it could really help them with their branding. It could help them attract patients and healthcare providers, investors, partners, everybody.
Yeah, that makes sense. Okay, so let's go back to Istaroxime for a minute. It's in phase 2B trials right now for early-stage cardiogenic shock. Can you just give us a quick overview of what that condition is and why this drug is potentially so revolutionary?
Sure. So cardiogenic shock, it's a life-threatening condition where the heart suddenly can't pump enough blood to meet the body's needs. And it's usually caused by a severe heart attack. And if it's not treated quickly, it can lead to organ failure and even death. And the problem is right now, the treatments that we have, they're pretty limited and they often come with a lot of really bad side effects. And that's what makes Istaroxime so exciting, because it actually helps the heart pump blood more effectively, which is exactly what you need when you're dealing with cardiogenic shock. And the early data that we're seeing is suggesting that it can do this without increasing the heart's need for oxygen, and it doesn't seem to be causing these dangerous arrhythmias, which is a common problem with the other drugs that we use to treat this condition.
So if Istaroxime is safe and it's effective in these later trials, it could be a game changer not just for patients, but also for Windtree, for their finances.
Exactly. The market for cardiogenic shock treatment, it's worth billions of dollars. So if this drug gets FDA approval and it becomes the standard treatment, it could bring in a huge amount of revenue for Windtree and really change their financial outlook.
Okay, so we've covered a lot today. Yeah, we've talked about Windtree's recent struggles and this bold new strategy that they have and the potential of Istaroxime and the risks and the rewards of investing in this company. Before we wrap up, Is there anything else you think is really important for our listeners to keep in mind?
Well, I think the most important thing for listeners to remember is that investing in biotech is always going to be speculative, especially with a company like Windtree. I mean, their success really depends on a lot of things that are out of their control, like the FDA approval process, right? That can be really tough and really unpredictable. So even if Istaroxime does great in the clinical trials, there's no guarantee that the IAEA is going to approve it. And you can really see this uncertainty reflected in their stock price. It can swing wildly up and down. So if you're going to invest in this company, you got to be prepared for a bumpy ride.
Yeah, biotech invest is definitely not for the faint of heart.
You got to do your research, really understand the company, the potential upsides and downsides, and just be prepared for that volatility.
And speaking of volatility, we can't ignore that 1 for 50 reverse stock split, right? That's a big move, and it could have a big impact on their future.
Yeah, absolutely. And like we talked about earlier, when investors see a reverse stock split, they often see it as a red flag because it can mean that the company's having financial problems and they're just trying to avoid getting delisted from the stock exchange. And in this case, Windtree had to do the reverse split because they weren't meeting the Nasdaq's minimum bid price requirement. But it's important to remember that a reverse stock split doesn't always mean that a company's doomed. Sometimes it's a necessary step to attract new investors and make the stock more liquid, and sometimes it can actually pave the way for a comeback.
So how should investors think about this reverse stock split with Windtree? Is it a sign that things are about to get worse, or could this be a turning point for them?
It's definitely a sign that they're facing some challenges, but it's also a chance to step back and reconsider what their prospects might be, especially now that they have this new strategy and with Istaroxime potentially doing so well. I think the key here is going to be to watch how the stock performs over the next few months and see if the reverse stock split actually does what it's supposed to do. Does it attract new investors? Does it stabilize the share price?
So basically, we just have to wait and see what happens.
Exactly. It's too early to say whether this is going to be good or bad for Windtree. We'll just have to see how investors react and whether the company can use this to gain some momentum.
And speaking of time, we're running a little short today, but before we go, I want to go back to something you mentioned earlier about Windtree's financial health. You said that their EBITDA is negative. For our listeners who maybe aren't familiar with that term, can you just explain what that means and why it's important when we're trying to figure out how a company's doing?
Yeah, so EBITDA, it stands for earning before interest, taxes, depreciation, and amortization. Basically, it's a way to measure how profitable a company is, but it doesn't include certain expenses that aren't related to their actual operations. It gives investors a clear idea of how much cash flow a company is generating just from their core business. So when a company has a negative EBITDA, it means that they're spending more on their operations than they're bringing in. And that can be a warning sign, especially if it keeps happening. It could mean that the company's having trouble controlling costs or generating revenue or both.
So for Windtree, their negative EBITDA basically means they're still losing money, and it makes it even more important that they're successful with this new strategy of acquiring companies with FDA-approved products, because that can help them start generating revenue more quickly.
Exactly. Windtree needs to find a way to stop losing money and improve their cash flow if they want to survive and do well in the long run. This new acquisition strategy, it could be a way to do that, but like we said, it's not without risk. So investors really need to think about those risks and weigh them against the potential rewards and then decide for themselves if they think Windtree can actually turn things around.
Well said. I think that's a perfect segue into our final thoughts on Windtree Therapeutics. They're at a crossroads, right? They have this exciting potential, but they're also facing some major challenges.
For sure.
And whether or not they're successful is going to depend on a lot of things, like how effective is this new strategy? How well does this Istaroxime do in the clinical trials? And can they navigate this ever-changing world of biotech?
Yeah, it's going to be a really interesting story to follow over the next few months and years. We'll see what happens. Investing in biotech is always a bit of a gamble, but Windtree's story is especially captivating. There's a lot at stake and the potential for both huge success and big setbacks.
Yeah, we'll definitely be keeping a close eye on them here at Investing Talk Podcast.
Yeah, and we also have to keep in mind that the whole biotech sector, it's facing some pretty strong headwinds right now. Interest rates are going up, there's more scrutiny from regulators, and investors are being more cautious. So all of this, it's putting a lot of pressure on these companies, especially the smaller ones like Windtree. So even if Windtree does everything right, they could still be impacted by these bigger forces.
Yeah, so it's not just about what Windtree does, it's also about this bigger market environment and how they navigate that.
Exactly. Investors need to be looking at the overall economy and how that might affect the entire biotech sector, not just one company.
That's a good point. It's easy to get caught up in the details of one company and forget about the bigger picture.
Right. And speaking of the bigger picture, we shouldn't overlook the fact that Windtree is committed to research and development. Even though they're having financial problems, they're still investing in their pipeline and especially in cardiovascular and oncology treatments. So this focus on innovation, it could really pay off in the long run, especially if they can come up with some breakthrough therapies.
Yeah, it's like they're planting seeds for the future while they're still taking care of the present.
Exactly. It's a tough balance, but it's important for any biotech company if they want to be successful in the long term.
So after all this discussion, what's the verdict on Windtree Therapeutics? Should people buy this stock, sell it, or hold it?
That's the million-dollar question, isn't it? And unfortunately, there's no easy answer. Like we've been talking about, Windtree has a lot of potential, but they also have a lot of risks. Their new strategy, the potential of Istaroxime, and their commitment to research are all good signs. But their financial problems, the reverse stock split, and this tough environment for biotech companies, those are all concerns. So at the end of the day, whether or not you invest in Windtree, it depends on how much risk you're comfortable with, what your goals are, and whether you believe in the company and their vision.
So it's a judgment call, just like most investment decisions.
Exactly. There's no way to predict the future. All we can do is get as much information as we can, look at the pros and cons, and then make a decision based on our own assessment of the situation.
Well said. That's some great advice for our listeners. Windtree Therapeutics. It's definitely a company to watch over the next few months and years. Their story's not over yet, and it's going to be really interesting to see what happens. Thanks for joining us today on Investing Talk Podcast. We hope you found this discussion informative. And as always, don't forget to subscribe to Investing Talk Podcast, share this episode with your friend, and leave us a comment. Until next time, happy investing.